Banking behemoths. A look at the decade's biggest mergers and acquisitions. Listen up because we're diving headfirst into the high-stakes world of banking mergers and acquisitions. These aren't just headlines, people, they're power moves, strategic chess matches that reshape the entire financial landscape. We're talking billions of dollars, millions of customers, and the kind of market shakeups that can make or break entire institutions. Over the past decade, we've seen a flurry of activity in the banking sector, with major players merging, acquiring, and consolidating at a breathtaking pace. Buckle up, because we're about to break down 10 of the most significant banking mergers and acquisitions between 2008 and 2019. Get ready to learn. First up, we're heading down south, where two banking giants, BB&T and SunTrust, decided to join forces. This wasn't just some regional shakeup, folks. This was a $28.24 billion mega merger that created Truist, the sixth largest bank in the entire United States. Sixth largest. That's a whole lot of assets, branches, and customers under one roof. BB&T and SunTrust knew that to compete with the big boys, they needed to bulk up and create a banking powerhouse. This merger gave them a dominant position in the Southeast, a region ripe with growth potential. But it wasn't just about geography. This deal also allowed them to combine their expertise, cut costs, and offer a wider range of products and services to their customers. It was a classic case of two strong companies becoming even stronger together. Next, we're going global all the way to Asia, where Mitsubishi UFJ Financial Group, or MUFG as it's known, made a strategic investment in Bank of America Merrill Lynch. Now, this wasn't a full-blown acquisition, but a $9 billion stake that gave MUFG a 20% piece of the action. Why would a Japanese banking giant want a slice of an American institution? Global domination, my friends. This deal was all about expanding MUFG's reach, boosting its investment banking muscle, and tapping into new markets. This move sent shockwaves through the industry and cemented MUFG's position as a true force to be reckoned with. It was a reminder that the big leagues are a global game, and only the boldest and the brightest can compete. Hold on to your hats, folks, because this next one is a game changer. We're talking about Capital One's acquisition of ING Direct USA, a $9 billion deal that shook up the world of online banking. This was a landmark moment in the industry's evolution, a clear signal that the future of banking was digital. ING Direct, with its catchy Save Your Money slogan and its reputation for high-interest savings accounts, had built a loyal following of millions of customers who loved the convenience and simplicity of online banking. Capital One saw an opportunity to tap into this growing market and acquire a massive customer base in one fell swoop. This was a brilliant strategic move that propelled Capital One to the forefront of the online banking revolution. Banks could no longer afford to ignore the digital landscape. They had to adapt or risk being left behind. Chapter 4. Comerica and Sterling Bancshares, a Texas-sized expansion. Now let's mosey on down to Texas, where Comerica Inc. decided to plant its flag with the acquisition of Sterling Bancshares. This $1.03 billion deal was all about expanding Comerica's footprint in the Lone Star State, a region known for its robust economy and growing population. Comerica saw an opportunity to become a dominant player in the Texas banking market, and they weren't afraid to put their money where their mouth was. This acquisition gave them access to Sterling's network of branches, customers, and local expertise, instantly boosting their presence in key markets. It was a classic example of a strategic acquisition designed to fuel growth and capture market share. Comerica knew that to compete in the competitive Texas banking landscape, they needed to think big and act decisively. Chapter 5. HSBC and Banco Bamerindos, a Latin American power play. Hold on tight because we're heading south of the border for this next one. HSBC, the global banking giant, set its sights on Latin America with the acquisition of Banco Bamerindos do Brazil. This deal, for an undisclosed amount, was a clear signal that HSBC was serious about expanding its presence in this rapidly growing market. Brazil, with its vast population and developing economy, represented a huge opportunity for HSBC to tap into a new customer base and offer a wider range of financial services. HSBC recognized that the future of banking wasn't just about serving developed economies, but about tapping into the potential of these dynamic and fast-growing regions. Chapter 6. BNP Paribas and Bank of the West, conquering the Wild West of finance. Back in the USA, BNP Paribas, the French banking powerhouse, decided to strengthen its grip on the American market with the acquisition of the remaining stake in Bank of the West. This $3.5 billion deal gave BNP Paribas full control of the bank, solidifying its position in the western United States. Bank of the West, with its strong presence in California and other western states, provided BNP Paribas with a valuable network of branches, customers, and local market knowledge. This acquisition was all about deepening BNP Paribas's roots in the American market and expanding its reach to a wider customer base. This deal was a major win for BNP Paribas, giving them a significant advantage in the competitive American banking landscape. Chapter 7. Hold on to your hats, folks, because this next one is a doozy. PNC Financial Services Group, a major player in the banking industry, made a bold move to expand its Midwestern presence with the acquisition of National City Corporation. This $5.6 billion deal was a game-changer, creating one of the largest banks in the United States. National City, with its strong roots in Ohio, Pennsylvania, and other Midwestern states, gave PNC a significant boost in market share and expanded its customer base considerably. This acquisition was all about scale and dominance, allowing PNC to compete more effectively with the biggest banks in the country. This deal sent shockwaves through the industry and solidified PNC's position as a major force in the American banking landscape. Chapter 8. Toronto-Dominion Bank and Chrysler Financial shifting gears into auto lending. Next up, we're heading north of the border, where Toronto-Dominion Bank, or TD Bank as it's more commonly known, decided to rev up its growth with the acquisition of Chrysler Financial. This $6.3 billion deal was a strategic move to diversify TD Bank's revenue streams and tap into the lucrative auto lending market. Chrysler Financial, as its name suggests, was the financing arm of the Chrysler Automobile Company, providing loans and leases to car buyers. This acquisition solidified TD Bank's position as a major player in the Canadian and American financial services industries. Chapter 9. KeyCorp and First Niagara, expanding the empire in the Northeast. Now let's head over to the Northeast, where KeyCorp, a major regional bank, decided to expand its footprint with the acquisition of First Niagara Financial Group. This $4.1 billion deal was all about growth and consolidation, allowing KeyCorp to strengthen its position in New York, Pennsylvania, and Connecticut. First Niagara, with its network of branches and loyal customer base, was a valuable asset for KeyCorp, giving them a significant boost in market share and expanding their reach in key markets. KeyCorp recognized that to thrive in the ever-changing banking landscape, they needed to be a dominant player in their region. Chapter 10. Royal Bank of Canada and City National, catering to the wealthy elite. Last but not least, we're heading back to the Great White North, where Royal Bank of Canada, or RBC as it's known, decided to make a splash in the world of wealth management with the acquisition of City National Corporation. This $5.4 billion deal was a strategic move to tap into the lucrative market of high net worth individuals and expand RBC's presence in the United States. City National, often referred to as the Bank to the Stars, had a long history of catering to wealthy clients in Los Angeles and other major cities. This acquisition allowed RBC to leverage City National's reputation and expertise to attract and serve high net worth clients around the world. Outrow, the future of banking, bigger, bolder, and more competitive. These acquisitions have significantly impacted the banking landscape, reshaping market dynamics. We've seen a relentless drive for scale, efficiency, and market dominance, market consolidation. Many transactions reflect a trend of consolidation within the banking industry. Larger institutions acquire smaller ones to gain economies of scale and enhance their competitive position. Geographical expansion: banks seek to expand their geographical footprint. This allows banks to reach new markets and diversify their customer base. Diversification of services: mergers result in a wider range of financial products and services. Acquisitions in wealth management or online banking sectors enhance offerings. Enhanced capabilities. Strategic acquisitions bring new technologies and expertise. This leads to improved efficiencies and better customer experiences. Regulatory considerations: banks must navigate complex regulatory frameworks. Ensuring transactions meet legal and regulatory standards is crucial. Synergy realization. Successful mergers hinge on realizing synergies from the transaction. This involves cost savings, cross-selling opportunities, and leveraging strengths.